Hello world, hello Australia, it's Jamie here, the Crypto Koala. Now today guys, I've got a very special guest. It's Tron Black from Ravencoin. Now guys, he's the lead developer over at Ravencoin. Great to have you here today, Tron.
Oh, thank you. Thanks for having me.
So mate, we'll get straight into it, hey? So Tron, could you tell us what inspired you to develop Ravencoin?
Sure. So this was actually the genesis of the idea was actually Bruce Fenton, and he was a former executive director of the Bitcoin Foundation, and he's a broker most of his life. And he talked to Patrick Byrne, who's the president of Overstock, and I work for Medici. And so when I found out that they were wanting to create a coin, I said that's a project I want to be involved in. So that's kind of how it started. So
I guess it would have been pretty exciting hearing that Overstock are involved and they've put in a lot of their own money into the project, and it's something that you really want to get involved in. And there's something like 430 Bitcoin developers involved in the project as well, isn't there?
Yeah, so that's there are other developers involved besides the ones here, but most of those developers, the 430, are actually because we forked Bitcoin, the code. So yeah. But there are other developers. And this is a call for everybody. We embrace all development. It's a super transparent open source project. You can go and make changes and make improvements and take issues and bring them to us and do pull requests, and we invite everyone to participate.
Super, man. I love it how I've gone through the white paper and it's got some really good references to Game of Thrones, and I really like that sort of concept. It's just some real nice, because I love Game of Thrones myself. It's good to have that sort of connection. Hey, Tron.
Yeah, it's kind of fun. That's mostly Bruce's influence. Yeah, so he integrated that in with the paper, the technology, and the Raven, and the kind of the mythos of ravens and what they're about, and that they're kind of tricksters, and so we just have really interesting icon or logo, and yeah, so it's fun. It's a fun project.
Oh, definitely, Tron. So mate, so how come you chose to fork off the Bitcoin, the Genesis block, the proof of work consensus?
Yeah, so the main reason for that is just the sheer amount of security and work and effort that's gone into Bitcoin and keeping that secure. So that we just feel like we're starting with, we started with that. We knew we wanted to add asset layers, the ability to do assets, but just starting with like kind of the most secure, the most looked at, the most recognized code base as our foundation, just to have a really, really strong foundation. And so that, so that's why we chose that as our base. Yeah.
Do you think in the future, with atomic swaps and the Lightning Network coming to Bitcoin, would that assist you guys in any way?
It can. So because of the time we forked, we don't have everything we need in Ravencoin to support Lightning yet. We forked just before they kind of finished up the work to get SegWit in there. So the assets don't run on SegWit right now, but it'd be a relatively straightforward change. We just have to backport some of the other things from the time we forked Bitcoin to now, and bring some of those things in. We do expect Lightning will be, will allow things to speed up if we ever have scaling issues. We really don't have scaling issues at the moment. We run blocks or capacity about 20x Bitcoin. We did expand things so we can run a little bit faster. So we have some room to grow there. And then atomic swaps, we already support those. So atomic swap is kind of independent from Lightning, and we can you can create transactions that swap Raven for an asset or an asset for an asset, and just throw that to somebody else, let them sign it, you co-sign it, and you throw it into the network, and it happens atomically. So that already exists.
Oh, brilliant, Tron. So could you tell us about the X16R algorithm and how that works, mate?
Yeah, so that was also something, so Bruce Fenton wanted to have this be relatively ASIC resistant, and part of that is to kind of make it more of the people's coin, sort of like the original Bitcoin, where it was everybody could mine it. You could have a gaming computer, you could have just a regular computer sitting around mining and get some, to kind of make it so that it spread and so that everybody had some. So that was kind of the original idea, and one of the ideas early thrown out was like, oh, well, let's make it so that it just changes algorithms every once in a while to just throw off the ASIC makers. which is fine. It would throw them off, but it would throw everybody off, and the security would drop and things like that. So we were brainstorming on how we were going to solve this problem of having mining going along, and then algorithm changes, and then security drops, and what do you do? And everybody has to adapt. So we said, well, as long as we knew something from before, earlier up in the chain, so that we knew what was going to change and when and how, so that everybody could kind of adapt similarly. And so we were kind of brainstorming that idea. Joel and I were, and so we ended up figuring out, well, we could change it every time. We'll just take the previous hash from the previous block, but you have to know anyway to mine this next block, and we'll just rotate the algorithms based on what the end bytes of that block are. So that's kind of the genesis of where it came from, and so it's had a lot of advantages actually for us. One is that it does kind of keep us ASIC resistant, probably not ASIC proof, but it makes it a little trickier to put a bunch of algorithms in an ASIC. We also didn't think we'd be FPGA proof. Those are programmable gate arrays, and we didn't expect that to be resistant to that. But we found that there were so many algorithms that they had to split between two cards, and bouncing the stuff between two cards kind of slowed things down. I think they'll get bigger cards, and I think they may have now, but so far we believe we're ASIC resistant, and we'll change it if we see an ASIC. So yeah, it also made it so that we can mine like on day one with a CPU, just a regular computer could mine. That lasted probably about 3 weeks before there were GPU miners out there. So.
I see that's quite an incentive. It seems to be very friendly to miners, that sort of that protocol, the algorithm.
Yeah.
So
sort of. We had some interesting stories. We had because the algorithms change based on what happens. Basically what happens in the previous block. We did have some stories where people would like tune their GPUs to just be like running optimum as possible, and then it would switch to a set of algorithms that either was more difficult on the GPU or something, and it would just fry their power supply. And so that was kind of an unexpected thing. So you can't tune it to like the optimum levels without it eventually being destroying your power supply. So be careful if you're mining.
You got to give the rigs a fair go. You can't sort of burn them out, and the power costs here in Australia. Most probably, if you've got solar panel, so I've got solar power on my roof. I'm not into mining myself, but some countries you've got to watch that power bill. But some people have got renewable energies. It can be pretty beneficial, So Tron, could you tell us about the core concept of Ravencoin, the tokenization of assets?
Sure. So that was originally in the plan. So the first, we launched on Bitcoin's 9th birthday, but the original plan was to have asset capabilities. And so we built those on, if people are familiar with Mastercoin, which I think is now Omni, or colored coins or Counterparty. So we're building that type of capability, the ability to create your own token into Ravencoin. And the advantage to building it in is you can get rid of some of the clunkiness of having have to do Bitcoin and then a layer on top, and then having to send a certain amount of Bitcoin around with every token you send. So we were trying to fix those problems at the same time. So that was the core idea. And then because I had worked on some other projects that used open assets and also Counterparty, and people would create an asset, and the way they linked to the data of what that asset was for, what it meant, was they would link with a shortened URL because they could fit that in the Bitcoin blockchain, and they would point to a website that would say what this asset was for, what it did. And the problem with that is those websites would just go away. They're not supporting the project anymore, and so now you don't have a complete picture of what all these assets were done for creation. And with Ravencoin, we linked it up with IPFS, which is Interplanetary File System. And so now we put the metadata, the data about your asset. So let's say you create a token called Lemonade. You can put information about the Lemonade token in the IPFS. And then as long as at least one person pins that, then that data will stick around. And so that's kind of how we link the token to what the token does.
Super. So I understand there's multiple use cases with tokenization of assets. So you look at like real estate, like fractionalized ownership of real estate, even like gold bars. and then you think of like collectibles, like online gaming. So, you know, like you go on World of Warcraft and you've got like a special weapon, or, you know, look, even with blockchain games or with crypto kitties, and a special one of them crypto kitties is, you know, and you can tokenize that as an asset. And I think the use cases, there's just so many out there.
Yeah. Yeah, we've seen a lot of things. I mean, a lot of people just cyber squatting on the names because the names have to be unique. But we've seen lots of real projects where people are using unique assets and then tying them to prints or art. We've seen other ones where they're doing certificates of authenticity and using the tokens and the keys to kind of prove that you own an asset, and you prove that you own something, and then you would transfer it to the new owner. We've seen other companies that are doing, you know, tokenizing, stocks and bonds and things like that too. So there's lots of projects being created on Ravencoin.
So what's caught my eye and the potential of this is the securities, the use case to assist STOs, and where you say you've got like a company and they want to issue, say, certificates. But you guys can provide that. Could you be able to just see how you can assist with securities and down them sort of lines, Tron?
Yeah, so that one's a pretty challenging area in the U.S. There's other countries that don't have as, we'll say, as strange rules or as crazy or evolved rules. And for that, I think Ravencoin is probably fine. You can create your certificate. You can say, I've got 1 million shares. You can sell them. And that probably works in lots of jurisdictions. We're actually working on a project right now for a different type of token that can have a little more control by the issuer in the cases of, let's say, needing to know who the name is, KYC, needing to be able to freeze an asset in the case it gets sent to somebody who's in a sanctioned country, or some of the rules that other countries require. And so we're working on kind of a project within Ravencoin for that. But for a lot of jurisdictions, it's already ready to go, and you can use the one that's there.
Awesome. So how does Ravencoin, so being compliant with regulations, I guess, how do you prove the asset is pegged to the actual Raven token? How does the protocol do that?
Yeah, so the protocol can't reach out and slap somebody if they kind of violate the agreement that they've promised. But one thing we do allow, or we facilitate within the protocol, is when you create a token, you can actually create a data file that says, here's my PDF. Here you can sign it with the private key. You can say who you are. You can say contact information. You can put all the information about you, about the project, etc. Now, obviously the protocol can't enforce that contract, and that's one of the reasons the regulations exist, is because if you promise something right on say, hey, you're buying a share or a piece or something of this, and it's a promise over here, and if you violate that promise, it's fraud. You promise something and then then you don't deliver, it's fraud. But if the SEC and things like that will take something that's a tokenized contract, a promise of delivery of something in the future, and they require that you register that or operate under one of the exemptions that they have, either sell it to accredited investors who should know better, vet you properly, or things like that. So the protocol can only do so much. We can link it to a document. We can have that document signed by the issuer, person that creates the token. We can do all that from a technical standpoint, and we do already. But we can't make the person deliver, unfortunately. So
of course. So just your opinion on this. Don't have to speak on behalf of of Ravencoin, but being in the US, do you think that the US are, with their current regulations around securities, around utilities and cryptocurrencies, do you think it's pro-innovation in the US?
No, I don't. I really don't. I mean, U.S. super innovative country, right? I'm not take anything away from the U.S., but the regulations that were put in place in 1933, 34, and 1940 were put in place at a time when computers didn't exist. There was only so much you could do. They put in hard-coded numbers. 35 people to do this. Up to 2,000 here. They just put in these hard-coded numbers which, I mean, if you're a developer, you'd be fired for that kind of stuff, right? Where you're just making up these arbitrary limits on something. But these numbers are in there, and it's very difficult to kind of solve for this in a token. I'm hoping those rules and stuff get reviewed and fixed. I know they've tried to fix them with I think the Jobs Act was one. There's a bunch of reg crowdfunding is another exemption. So there are things that they've kind of added on or exemptions that they've made to the rules that help. But I also know that a lot of people are just moving to other more friendly jurisdictions, Malta and things like that have and there's also some efforts in the States as well to classify these things differently that make things easier. And Wyoming's probably the leader in that. Caitlin Long's kind of led an effort, and they've made some rules here in a neighboring state, and we're actually trying to do the same thing in Utah. So working with some of the legislators to kind of hopefully do a similar thing here. So, but I think in general, the federal laws, I think, need to be, let's say, reviewed and looked at and maybe made bring into this century.
I did see the article recently on Wyoming, and the state recently announced that they're pretty pro crypto, or their regulations a bit more.
Very much so. Yeah.
And recently, also going back a few months ago, where someone introduced a bill to change the classification to digital assets to actually make the definition clearer. So I know it's on the table. We just have to wait and see, I guess, Tron.
Yeah, all those things are super helpful, and I hope that they pass. You probably watch a little bit of our politics. We're kind of in a weird state at the moment, a little contention over here. But hopefully those things pass. I think they're needed, and I think if they made more clear legislation and also fix some of the ones where it's kind of these arbitrary numbers and there's these limits and you can't invest unless you're a certain wealth level and things like that are kind of like those should be reviewed and fixed.
Oh, definitely. So Tron, moving on now. So being proof of work, the miners are paid in the RVN token, the Ravencoin token.
Yeah. So
it looks like a good incentive to mine RVN, doesn't it? Like the long-term block rewards. Could you tell us about the long-term block rewards?
Sure. Yeah, absolutely.
And I know the tokens are burned over time. Would you be able to just tell us about that?
Sure. So what we did was we increased the supply. So the supply will be 21 billion with a B, whereas Bitcoin is 21 million with an M. Right. So it's 1,000 times the supply. One of the ways we did that a few different ways. One, we made the chain faster. So blocks are created every minute, so it's a little bit faster chain than Bitcoin. We made the blocks a little bit larger, and then we increased the reward by 100. So we made it 10 times faster and increased the reward by 100. So we have 1,000 times the issuance schedule. We left the timing of the block halving. So every 4 years, the block reward will halve. So right now, every block you get 5,000 Raven, which is great. And that will happen for about 4 years, from January 3rd of last year to it's by number of blocks. It's not actually by date, but about 4 years. Then it'll be half. So half of all the Raven that will have been issued at that point. What that means is likely that this is one of the cheaper times to get Raven, just because the issuance supply there's just lots coming out. And at some point, and this happened to Bitcoin as well, that halving happens, and then the supply doesn't come out as fast. So that'll happen in about 2.5 years.
So I guess when people talk about the half of Bitcoin, it's seen as an event that increases the value of Bitcoin. So I guess it's like with Ravencoin, if you get in now, you do the mining, a couple of years' time, it's the incentive there is to the half, and effectively it drives up the price of the token.
Yeah, so there's no guarantees, and it's not as much as it drives up the prices as right now. There's so much being issued that the miners who are paying for electricity and selling that into the market to basically pay back their electricity, it tends to suppress the price. Yeah, I don't want to promise anything, so
Of course.
I don't talk about price.
Yeah.
But one thing that did happen, and I can talk historically about Bitcoin because I've watched at the halvenings, which is what they come
just like the comparison of Bitcoin as it halves. It seems to be historically as it halves, it does have an impact on the price.
It has, and I watched that kind of every time. In fact, there would be all these calls for like, oh, Bitcoin's not, all the miners are going to drop off, everybody's going to leave because they're going to get half as much. But as it approached that date, the price just tended to raise, and it was a very seamless thing. And part of that is everybody knows it's going to happen. This isn't like a surprise event. I mean, it's on a certain block, so everybody kind of knows that's coming. And so each of the two happenings before, right, so from 50, 25, 25, 12 and a half, they've been very, very smooth, and the price has gone up on Bitcoin. So I could talk about historically what has happened with Bitcoin, but certainly don't want to promise anything to anybody. Yeah.
Sure, Tron, I completely understand. So recently heard with the Ethereum Classic attack, with the 51 attack.
Yeah.
So being proof of work, are you guys, I'll say immune, but is it harder with your protocol and the way you've got it set up to make it harder for you guys to be attacked?
Yeah, so we actually do have something in there to help that. So we did have a 51% attack. This was earlier days. We have quite a bit more mining horsepower now than we did then. Somebody did do that, where they basically rewrote 22 blocks. It was kind of a combination. It was one of the exchanges that was accepting very low confirmations, lower than they probably should have. And so they were able to kind of run back and rent a whole bunch of horsepower, rent a bunch of hash power from Nice Hash, I believe it was. And they were able to rewrite, so they were able to send to the exchange, rewrite, jump back, and then outpace the main network and replace those blocks after they'd converted to Bitcoin and withdrawn from the exchange. So this is a bad thing. I mean, it's a bad thing for every coin. I've written up, if you go to medium.com/@Tron Black, I've written a bunch of articles about a bunch of different things. Among them is an analysis of what happened, how it happened, what our options were to fix it, and which option we chose to fix it. And the one we chose specifically because we are concerned about that type of attack where the security, let's say, securing a $50 million chain or $100 million chain, but the tokenized assets on that chain could be billions. I mean, it could be works of art, it could be buildings in New York, etc. So there's this danger of somebody trying to rewrite, double spend, and things like that. So we actually looked at all the options. And again, this is all in the Medium article. If you're interested, please go read it. I talked about a bunch of different options.
I'll put the links down below, Tron.
That'd be great. That'd be fantastic. And so what we did is we said, all right, because of this, and because we have this mismatch potentially between the amount that we're getting in mining and the amount that we could potentially be securing on the chain, we made a choice to not be able to, after 60 confirmations, the chain will not undo itself. So all the nodes that are caught up will continue running and will not accept the blocks from a 51% attack. They will not accept a surprise 51% attack, which is how they do these attacks on the exchanges. And so we think that's a good solution. We actually got it from proof of stake coins, which have a different problem called nothing at stake, where you sell your coins and then you jump back where you still have them in the chain, and then you try to use that to kind of do proof of stake to try to catch up. And so we kind of combined the two technologies, the fix from proof of stake and proof of work. We put those together. We think that's a good solution.
Awesome, Tron. So what does 2019 have in store for Ravencoin? I know you guys were looking at getting on to the Ledger hardware wallet. Have you had much?
So we actually, the code is written and it's sitting there, and we're waiting for Ledger at this point. And I hate to say it because I'm not against Ledger. It's just Trezor already has it. So if you need to secure Ravencoin, you have to go with the Trezor right now. Ledger, we want you to catch up and get that code in there. And it's very much like Bitcoin. It doesn't take a lot, but it does take help from the other company to kind of get it in their firmware and in their plugins and things like that. So we hope it happens any day. And if anybody's out there and wants to put talk to them and email them, tell them they have a ledger and want support, go ahead and send them a message.
So, Ledger, if you're watching this, guys, yeah, just pull your finger out, please, and because I've got to let go, and you know, I would be good to have be able to accept Ravencoin. So, yeah, hopefully Ledger can assist. So, Tron, it's been an absolute pleasure. I'll just say again, I'll put down the links down below. I'm just going to give a quick disclaimer like I was doing all my videos. I just provide a platform in which to share these projects on. I'm not a financial advisor. Do your own research, guys. I've got an interest in Ravencoin. I like the project. So if you're interested in getting involved with the project, checking out Tron's articles, the Ravencoin's articles, I'll put the links down below, guys, as I've already said. Tron, it's been an absolute pleasure talking to you, mate, and have a wonderful day.
It's been a pleasure talking to you. Thank you.
Thank you, Tron. See you later, mate.
All right.